of Money with Santosh Sirur.
Hello and welcome to another episode of The Sound of Money. It's an amazing episode and I have a very, very special guest. Joining me from Mumbai is Mr. Akhil Chaturvedi. He is the director and the chief business officer of Motilal Oswal AMC. And we're going to talk to him about not just business, but about his life, his career progression, etc., etc., etc. Hi, Akhil, and welcome to this episode of The Sound of Money.
Hi, Santosh. Pleasure talking to you. Thank you for inviting me.
Most welcome. Akhil, I think we are in an age where India is the next decade has been a lot talked about. What are your views in terms of the economy, the India growth story? There's so much of positive optimism in India at this point in time. What are your thoughts on the India story?
So my thoughts typically resonate with what you have been hearing, of late, and a lot of global analysts, local analysts. Everybody is now talking about the India next decade or golden decade ahead.
Yeah.
I've been fortunate to work with one of the most bullish investors in India, Mr. Ramdev Agarwal. He's my boss.
Yep.
So ever since 2013, I joined Motilal Oswal. We've been bullish since then, right?
Yeah.
So, we used to have this when I joined this company in 2013. So when I was going through the initial presentations, Ramdev used to have one slide always. The first slide used to basically depict the next $1 trillion opportunity.
Wow.
So what he used to show that it took 65 years for India to become 1 trillion economy, and then 1, 2, 2 took about 5-6 years, and then 3 years for the third. And the chart used to go on till 2030, depicting about $6-7 trillion. That we were talking in 2013. And that chart, if I show you, is being used by many outside people also.
Wow.
So we have believed, he has believed in it, and working with him, obviously, we also started to understand that some things were changing.
Yeah.
And I think ever since 2014, things did start to, a lot of things which were going on. So many reforms have happened. Of course, in the short term, they were all, every reform has a teething period.
Yeah.
So we did go through that little bit of a slowdown period. And then I think in the last 4 years, I think it's been a quite dramatic change in the way we have come back, especially after COVID.
Yeah.
I think India as a brand itself also has changed quite a bit, right?
Agreed.
So locally, of course, a lot of things have changed. We are, of course, investing a lot in our infrastructure. We are investing a lot in the fintech space, digitization. We have seen that the middle class population also is growing.
Yeah.
We bought 400 million people out of the poverty. So all that is resulting into doubling of per capita from $1,000 to $2,500 now.
Yeah.
Right. So the consumption thing also is quite. If you come to India, you will see that people are spending. Right. People are upgrading their lifestyles.
Definitely.
The real estate reform has changed the entire real estate as an industry itself. Right. So now you have good builders, people can buy flats and get their flats and not lose their money. So a lot has changed slowly, steadily, which is all reflecting in this 6.5-7% growth when the world is actually slowing down.
Yeah.
We are sustaining or actually growing our economy.
Yeah.
I think now that one thing which was missing, which was that the corporate India was struggling with growing their profitability. That also has come back.
Was taken care of. Yeah, the taxation bit.
So, so yes, there will be short-term challenges. These inflation, interest rate. There will be short-term challenges. Like now, you see the oil is going up. So those are short-term issues. But basically, the trend line is very positive for India in terms of macros as well as micros. And I think the biggest thing what we have achieved is this $600 billion of reserve. That is actually helping us a lot to build credibility in the global markets, as well as sustaining our macros. Unlike many other developing countries would have gone through huge volatility, we have been very lucky that way. It's a start. I think it's a start and way to go. It's not going to be 10 years. I think we are in for next 25-30 years of reasonably high growth.
Yeah.
What we say in Hindi, the Amrit Mahakal, right? India at 100.
Yeah.
We are looking at, obviously, we will be the third largest economy. I think that we will do maybe in the next 3-4 years.
Yeah.
But we're looking at 20-25 trillion of economy in the next 25 years. So it's going to be a good long play.
Yeah.
And I'm very confident that all of us put together will make this happen.
Absolutely. A very stable government, a very strong government. And now with G20, a lot of recognition coming for the government. I guess the
Yeah.
policies, that have been laid out, well defined, probably take India in the next level, right?
Absolutely.
Yeah.
See, other thing, and you see when you talk about government, whichever government comes, I think where we also struggled. I mean, I'm not taking political sides, but
Mm.
I think there is a difference between a majority government versus a coalition government, right? So very, very long while, I don't know, for donkey years we have had coalition governments, right? So in
True.
coalition
Yeah.
governments, you have to take care of many interests,
Yeah.
and
Yeah.
that sometimes delays your major reforms, if any, you have to do, which is what we have seen in the last 9 years. Because there is one party which has a majority, so a lot of reforms go through much more smoothly. Execution is much better. So I think, I hope we can. This is one thing which we have to monitor, that we have a we have a majority party ruling
In
government,
power. Yeah.
and for a long period of time. So,
True.
whatever needs to be done for the betterment of the country is done without any speed breakers.
Yeah. True. But are there any challenges that you foresee, some stumbling blocks where probably things go wrong, then, it could be a self goal for India. So do you see that anywhere, or you think it's all hunky dory?
No, no, nothing. I mean, nothing is, you cannot take anything for granted. So I think the biggest challenge is the challenge which will come next year. So we have elections again.
Of course.
So
Yeah.
like I said, that challenge is, at least personally, I would feel that we need a stable government, uh, whichever government comes in, or we need a party which has a majority within any coalition, right? So that the reforms, the journey of reforms and execution of reforms has to go through, because uh, I mean, eventually governments will decide the pace of the growth of any country, right? So you
Correct.
will grow now, whether you grow at 5-6% or 19%, that will depend on who's there in the center, right? So that is something which will always remain. Every 5 years. It will be a challenge. Uh, the other thing is that if you look at more from short and medium term, yes, we are a globalized world, and so we are connected, interconnected, and if things are not well internationally, then obviously we have an impact locally as well. So, for example, if the oil prices go up, I mean, we are a huge oil importers, so it does create inflationary pressures, which are not really good sign. So if world is slowing down, then obviously it will have an impact on our exports, which also is
Agreed.
not a good
Yeah.
sign. So the global adjustments also create issues. Political stability is an issue. So these things, generally what I've seen in any 10-year period, if you plot, let's say between 2010 and 2020, or 2000 to 2010, and if you plot that
Yeah.
how the economy has done or how the markets have done, so every time you see that there are I mean, maybe on a 10-year period, let's say take example of 2000 to 2010. Now 2000 to 2010 was game changer, because that is the year we doubled our economy from 500 billion to $1 trillion, right? So that was the
Yeah.
first decade
Yeah. Yeah.
where India did it crossed that first barrier. But
Hmm.
in that period also, there were many periods of short-term challenges. In those times also, we have seen oil prices have gone up. We have seen the INR getting depreciated. We have seen interest rate issues. So similar issues and political changes, all those things have happened. Despite that, that phase was a great phase, right?
Correct. Yeah.
So those challenges will be there, and but we are much better positioned financially
Hmm.
uh, to overcome some of the challenges which were little difficult to overcome in the earlier decades. I
Yeah.
think now we are better prepared, and obviously all of us as Indians also, we are a young country, we are an aspirational country. So everybody is working very hard, uh, to do something. We are a land of entrepreneurs. So you look at in last decade how many entrepreneurs, how many billionaires,
Agreed.
we have produced.
Yeah.
The kind of opportunities in the tech space, it's huge. The innovation, what is happening out here is crazy.
Agreed.
And manufacturing is now coming back. So that also will give a huge fillip. We have to work on our infrastructure. I don't know if you've been to Bombay of late, but the kind of work which is going on, Bombay will look like Hong Kong.
Absolutely. In fact, it is said that Mumbai, the highest number of cranes operating on the planet is in Mumbai.
Yes,
So
it's in
that
Mumbai.
tells you where it is, right?
Yeah. You have undersea projects, you have land projects. So a lot is changing, and it's going to take some time for us to become developed, right? So hopefully next 25 years, but we are on the right path, I would say. There will be challenges, there will be short-term challenges, and we will have to overcome that, but we are better prepared. All I can say is that.
Yeah. I wanted to talk to you about the Indian stock markets. I'm sure you've seen the journey from on a different Sensex or NSE index, and now, right? And we are in 20,000 plus on NSE and 65 plus or 66 now on the. How's that journey been for you? And as you rightly mentioned, Ramdevji's vision in 2013, of that trajectory. Where has been your spot there in this whole stock market journey?
No, so I've been in mutual funds now for over 20 years. Right? Briefly, my initial 2 years were in NBFC. So if you keep that aside, 21 years have been directly, indirectly in the stock markets as individual investor and obviously working in the industry. So yes, you are right. I've seen when I came in this business, Nifty was hovering between 750,000 points. So from 1,000 to 20,000, I've seen that. At that point, I think Sensex was 5,000, so 5,000 to 60,000. So it's been obviously, so like I said, that 2004 to 2008 was a golden phase for Indian stock markets. I think that was perhaps the best and the most longevity bull market for India, which lasted for some 6 or 8 year period. Right, then 10 years has been 2010 to 20 were very flattish and very bad. I mean, absolutely no money made in those 10 years. And then now you are seeing that whole catch up which is happening. So it's like equities by nature is a asset class which goes through its own good periods, patchy periods, and down periods. But net what you have seen in 20 years is what I have seen is 1,000 to 20,000. The only regret is that I have not participated in this because when you start your career, you experiment. So I've done all kinds of stupid investments, short term, future options, lost money. So I've done my real participation in Indian stock market journey actually started only in 2000, 2000 I think 13 or not 13, 2008.
2008. Okay.
Global financial crisis.
Okay.
That was the last time I seriously lost money in this market.
But was it equity or did you use the mutual fund?
I have always been equity.
And mutual fund route essentially, or is it direct?
So prior to 2008, it was all about masti, So it was all
the fund days.
I can't even tell you what all I've done. So net I've lost money.
But you learned a lot, right? The experience must have been tremendous.
So experience was not to leverage. Experience was that do SIPs. Experience. So basically, experience was do regular investing, keep buying on dips and keep buying on. So just be a regular investor, do through mutual fund, diversified funds, and rest everything is taken care of. Honestly, I can tell you all my SIPs of 2008-9 are compounding at 18-19%.
Of course, I can imagine.
It doesn't matter. Yeah. So as simple as that.
True.
So it's been very interesting, and I think again this is nothing. The way I am seeing it for myself, and obviously we share this with our investors and partners also. I want to be a phenomenal bull market. Phenomenal. I think
awesome.
We are already talking. I see everything is connected to the economy, right? So if I'm saying that 25 years the economy will be $25 trillion, then even if your market cap to GDP is 100% or 1x, then your market cap should be $25 trillion, right?
Absolutely.
So when you see that long big picture, things look very different. When you look from 1 year, it might look slightly different. So we are very, very excited on India as an asset class itself.
Indeed.
Right? And, stock markets will reflect mood of the nation, right?
Correct. Absolutely.
Most news channels talk about mood of the nation.
Yeah.
So if your economy grows at 11-12% nominal, if the corporate earnings grow at 13-14%, at least bare minimum you'll make is 13-14%.
Yeah,
And
definitely.
you just do the compounding part. So it's going to be a great journey here.
Great journey. I wanted to know your views on financial literacy. The reason being that during the COVID season, you had tons and tons of retail investors getting into the stock markets. You had record number of demat accounts being opened, youngsters getting into it, right? So how important has been the role of organizations like you and the industry as a whole in terms of financial literacy? Because it's not just about financial literacy. You also have the finfluencers, as we call them now, in the scene. And there has been a lot of, they have been doing good. At the same time, there has been a lot of flack, especially SEBI coming into that very soon in terms of regulation for them. So what's been your experience in this space?
Yeah, so I think over the last 20 years, I've only seen that the efforts being put in by the industry, including the regulator, has only been pacing up. So every year I've seen that the progress on reaching out to people of India, trying to explain to them the importance of financial planning, asset allocation, equities, long-term SIPs, all of these things have been done rampantly. Earlier, it used to be small crowd who was doing it, and now you have so many people. So many people have taken retirement and are fully now involved in doing financial literacy. At least in our industry, there's a small corpus also which is created, regulation, where 50% of that provision is spent by the AMFI to do financial literacy, and 50% is spent by the AMCs. So whether it is media, whether it is social media, whether it is people like you, influencers, I think all of them are putting a lot of efforts, and the result of that in the last 6-7 years is that obviously you have seen 3x on demat accounts, right? So I think we have now about 125 million demat accounts. You see mutual fund folios are also going up. The SIP book has literally gone up 2.5 times from 5,000 crores to 16,000 crores, growing at good 15%. And overall, the industry has also grown. So it's all reflecting into the outcomes. And again, I'm saying that we are a country of 140 crore people. Today, we have been penetrated only in unique 3.5 crore people. So the opportunity of 3.5 to 5 to 10 to 15 over next 15-20 years is going to keep. Can you imagine that maybe you will relate to this? Both of us are probably in the same experience band. There was a time Indians used to invest in Indian markets looking at how the FIs were investing. So we used to, after the FIs used to come, and we used to go after the FIs used to go. Hence we never made money.
Correct. We only looked at when they were coming in, but we were completely down when they just exited, right? It was like quick money out. Yeah.
So they were making money, but we were, kind of. So we used to say, sometime back, we used to say that foreigners have more belief in our country than we have belief in our own country. That has changed completely. See, 3 years after the Ukraine war, we saw exodus of $50 billion of FI money. In fact, FII as a contribution to market cap has gone down.
Yeah. Your local retail investors and Indian investors are itself
the entire thing has been absorbed by retail, and it is not stopping. It is not stopping. So you have $3 billion of SIP flow anyways. Then you have $12 billion more coming through insurance and EPFO and all of those things. So strong economy, strong corporate growth, earnings growth, and very good liquidity, not dependent on international liquidity, our own liquidity. And despite this kind of a liquidity, our penetration is only 4.8%.
We have yet to get into the rural economy, right? The Bharat, right? And I don't know how much, and maybe you could share.
It's happening. So we are well entrenched into now, I would say, tier 3 markets. That's how we are as an organization also. The larger AMCs obviously are present in 500, 600, 700 locations. But we are seeing that the cult is going. In fact, post-COVID, during COVID, it was a real breakout period where the tier 3, we see a lot, and there has been prosperity also over there.
Agree, absolutely.
A lot of businesses, local businesses in many sectors, industries have prospered. You see, most of the private equity funds are funding businesses in remote towns and cities where plants are there. So a lot of tons of money is going there,
Yeah.
making rich somebody.
Yeah.
That money is getting channelized. A lot of our
Absolutely.
alternate funds, whether these are PMSs or AIFs or private equity, big checks come from tier 3, tier 4 towns. So yes, in terms of number of people, still long way to go.
Yeah.
But the journey has started.
That's absolutely fantastic. But at the same time, right? I mean, do you agree that it's because of unfortunate 1992, but you had an awesome SEBI coming in and laying the base structure, the framework very strong, and the result of it, what we see today, because you have strong rules and regulations around it, on a framework around it.
Yeah. So by nature, we are a conservative country, right? So every time there is a shock or there is a scam, then we have seen any government, they have taken concrete action. So I have a firm belief that any industry, when there is a regulator, in long term, that industry really becomes scales up and becomes very prosperous. We've had a very strong Reserve Bank of India, and look at Indian banking system. We have lived through the global financial crisis. In fact, we got a lot of compliments then.
Yeah.
We have lived through the COVID crisis without really, messing up your fiscal side or doing unnecessary borrowing or throwing off money. We have lived through the COVID, the war kind of a situation. So at these shocks, thanks to Reserve Bank of India, we've been able to manage, and now and we are now sitting on $600 billion. The way they manage currency, they bring about a lot of stability. Similarly, for capital markets, once SEBI came in after 92, look at now, we are much more. Our stock markets, capital markets are much more developed. We will be the number one.
Amazing.
In the technology, everything is tech, right from how things change into DMAT, then complete. People are buying and selling on applications, on mobile apps, right? This country, how many countries offer this kind of? So yes, regulators will from time to time keep tightening and keep regulating in the interest of retail investors. But thanks to SEBI, that we have seen our direct equity business growing up, IPO markets are booming, mutual funds have grown leaps and bounds. So yes, they have done a good job. And now, like I told you, Real Estate Regulation Act, after RERA coming in, this was the last thing which had to be plugged. Because eventually, first thing all of us, especially in India, one wants to buy is a home. And there is where, because of no regulation, they were all kind of crooks. People were losing money, right? So now that is also plugged. So that market is also booming for the last 5 years, and there's no stopping.
Correct.
So I firmly believe that regulators play a very important role. Sometimes, in short term, it may not, you may not like it, but eventually
it's in the interest of the citizen.
They are like parents, so when they are tough on us, on
you got to give them the whack.
So that time kids don't like it, but eventually they come out well, right? So,
absolutely.
Yes,
that's great. I also wanted to talk to you about your own personal career progression journey. Did you ever think that you would be in this mutual fund equity space ever? Or what was your, if you were asked when you were a kid?
No, I had no ideas. Honestly, I come from, my dad is a chartered accountant. So the first thing was, I need to do CA and try. I mean, you try to do what your father is doing, right? So that was the initial thought. But when I tried my hands on CA, I flunked once or twice. I said, this is not cut out for me. So I did Bachelor's of Commerce, and then the easy way out those days in mid 90s was do an MBA. I mean, that is one degree anybody can get.
A safe route.
So I went to UK Leeds University. I did my master's in finance, and I scored well, so they gave me entry into MBA. So I did my MBA marketing back to back, so double postgrad. And I came back to India not knowing what to do. So I used to go through the newspapers and search for any kind of vacancy. So I've been to a entertainment company, I've been to television company, but obviously that one of my uncles referred me to Birla Global Finance, Aditya Birla, in 99. So I met there, and that's how by default I landed up in financial services. But when I entered inside, fortunately, Birla Global Finance was the sponsor to Birla Mutual Fund, now Birla Sun Life Mutual Fund, Birla Sun Life Insurance, distribution. So through that company, in the 2 years, I got a full understanding that, okay, within financial services, you have mutual fund, you have insurance, you have NBFC, you have distribution company. So after 2 years in NBFC, obviously it was very monotonous. I was not enjoying it. I got an opportunity with AMC. AMC business used to give me that kind of a feel good factor that this is a business where I want to be. At least from outside, I used to feel that way. And it's a very small industry. So that is where I got my first break in Birla Mutual Fund. It was an internal transfer. And then ever since, it's been same industry, and it's as fresh as as I started 20 years back. Just made so after working for a reasonable long period of time in Birla Mutual Fund, learning the tricks, experimented with a startup coming from Japan, Daiwa Group. That started off, but unfortunately it didn't work out well. So they shut down the shop. But there's a saying that in adversity there is opportunity, right?
Yep.
So I think the biggest blessing, one was of course working in Birla Group. The second was working in Motilal Group. Because here, honestly, Santosh, I really learned what equities is all about.
Wow.
Yeah. So here, I mean, it's been more of a school for me, than a company where I'm just working for money. I'm working here for much larger things. So that knowledge-oriented building up of business. Plus, when you work with promoters, you need to have a strong mindset that how money is made, P&L, business, how to balance all of these things. Last 10 years at MO, seriously, has been a huge blessing in disguise for me.
And I'm sure the guidance, the vision of Ramdevji must have been a huge contribution to your own success in your career.
Absolutely. No, it's been, I can't explain in words, but it's been a very, very, very good journey. It's been tough. It's been, there have been good times, there have been bad times. But the commitment of the group, the commitment of the promoters, the ethics, integrity, how they take care of people. When I joined, it was a total group was all about 1,200 people. Today we have 12,000 people.
Wow.
So if it is a platform. Again, I would say there is a lot of similarity between Birla and Motilal because both are Marwadi companies. That's one thing apart. But Birla gives people a lot of opportunity. It's a platform. You take care of, you use the platform to become big. It's up to you. Motilal Group also is like there's a platform. Come, do whatever you want to do nicely and enjoy, become big. So platform is very important. That is what I've learned. Right. Okay. So
that's good.
That's been the short journey.
Fantastic. What's a day like when you're not in office? I'm not just talking about a weekend, but otherwise, what keeps you busy? What's your passion in life, and what keeps you really good going?
Yeah, so that way I've been very volatile in my what I do in my free time. So in patches, I've been very heavy into exercise. So post work, it was all about health and body, etc. These days, I'm spending a lot of time. I watch a lot of podcasts like people like you are doing.
Great.
Things to learn from successful investors. So all these good readings, which is because of technology, so much of content is there. Honestly, the more you read and more you hear, the less it is. Right.
Agreed.
So I do that quite a bit apart from family life, going out, all of these things apart. I like to read and hear a lot. Read not books in conventional terms, a lot of ongoing affairs,
current affairs,
including politics, including some good podcast, some good editorial. Like I've just read, just reading, or just trying to understand the latest note which has come from Howard Marks on winners and losers. You need to ride on the winners and you have to cut your losers. So it's a very interesting. Still trying to, because it's very the way he writes. It takes some time to correlate, relate. So those things, I love to do, and and I'm trying to get back into my marathoning. So
that's great.
The journey has restarted. Let's hope it reaches the final destination.
Absolutely. So since you mentioned podcasts, just make sure you have Sound of Money as in one of your business podcast lists.
I will immediately. immediately.
Absolutely. Thank you.
Yes.
Akhil Chaturvedi, Director and Chief Business Officer, the Motilal Oswal AMC. Thank you so much for joining me on this episode of The Sound of Money.
Thank you, Santosh. It was really, it was fun talking to you. I've done many interviews, but this was good fun.
Thank you. Thank you so much.
Sound of Money with Santosh Sirur.